Investment psychology. How does the market affect you? What forms the foundation of all your investments? Is it based around your worldview, or is it based around your emotional sentiment? Someone who is more cautious by nature will invest much differently than someone who is more prone to taking risks. What does how you invest say about you as a person? Investment and psychology have always been bound to each other, at least in the free market. When the prices start soaring, people buy in for fear of missing out. And when things are crashing down, people sell out of the fear of losing all their wealth. The other factor that plays a major role is greed. When things start to get overextended in a market, it is incredibly easy for people to fail to see the writing on the wall. Greed is like a drug. It will whisper in your ear, "This is your chance to make it. This is going to the moon." The mix of fear and greed is what drives markets. Knowing this, how can you use these two emotions as a tool for your own investing? By doing the opposite of what everyone else is doing. When you see blood in the streets, it is an opportunity to buy. When things seem too good to be true, sell. How do you avoid buying high and selling low? Professional traders will always tell you it is about having a trading methodology and sticking to it. You have to know when your entry and where your exit is going to be before you even make the trade. If you do not stick to your method, your emotions will get the better of you. It is unavoidable. It seems like trading in the markets is one of the last frontiers of the American dream, and being able to go from rags to riches. It can change people's lives for the better, but it can also destroy people's lives. How have I navigated this landscape? All of my investments are betting against the legacy financial system. I have little faith that the traditional stock market will be able to sustain the path that it is currently on. The stock buybacks, the Fed injecting trillions to prop up the overinflated markets, and the housing market bubble are all side effects of the Keynesian economic model. Unlimited profits and continual growth at any means necessary is completely unsustainable and will crumble sooner than later. My whole financial plan is betting against this system and its eventual downfall. I am invested in what you would call anti-fiats: gold, silver, Bitcoin, Ethereum. My plan has been a bit of a mixed bag of risky investments with extremely high profit potential and stores of value, which the purpose of is to protect my wealth from the gradual decline of the US dollar, which has lost 90% of its buying power since the creation of the Federal Reserve in 1913. That's a whole bag of worms on its own. I'm investing to protect myself and to build my wealth. I seem to be combining the risky behavior with a mix of conservative skepticism. This does reflect on my personal worldview tremendously. It is interesting to think about. If I am right, I will be set for the rest of my life. And if I am wrong, a large portion of my wealth could be obliterated, but I would still be fine. I am confident in my positions, but I am aware that I could be wrong. I am willing to adapt as the landscape shifts. Never marry your investments. It's something I adhere to. You don't want to be the one to ride your investment to zero because you can't accept you are wrong. This is easier said than done. I do realize that I need to further develop my method for an exit strategy and not just wing it. I am self-taught in finance, and I know I have much more to learn. If I am honest with myself, I have been complacent in furthering my worldview beyond where I'm at now. I am only 27, so there is much development ahead for me, and it is not advantageous to be stubborn in this line of wealth building. I have made plenty of mistakes along the way, over-leveraging myself, causing liquidations, falling victim to the emotional roller coaster that is a bull run, and failing to see when the top is in. I have made every mistake I have outlined here. When you make 10x on an investment, it tends to make you feel like you can do no wrong, and you are a trading prodigy. Getting lucky with your timing can inflate your sense of skill, and that is detrimental to longevity in the markets. Currently, I am treating all my investments as cold pots, which are not to be touched unless I am forced to in an emergency situation. I have stopped making trades until I develop a strategy to gauge my emotions and navigate the markets without the impulsive waves of thinking you can beat or time the market, especially in crypto.